Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome and good morning. This is your IRS Solution Attorney, Darrin T. Mish, and I'm joined by my beautiful co-host, Katrina Madewell.
That's me. Welcome to the show this morning. You may have heard Darrin on my show last week, Tampa Home Talk on Fridays at 9 a.m. And Darrin has been doing his show for a while now and decided that we were going to migrate over to Money Talk.
And I got to tell you, I'm super excited to be here. This is such a great home. Money Talk, 10 a.m. is just perfect for our show or my show and what we're talking about here, which is IRS problems and how they start, how to prevent them, and more importantly, I think, how to solve them. Because, Katrina, these are really some people's very biggest problem in their life. They come into the office and sometimes, I'm not exaggerating here, they're trembling. They have physical manifestations of their stress. And it breaks my heart because so often it's just really unnecessary. It's just, to me, the solution seems simple. To them, because you don't know, it can seem insurmountable. Oh,
I'm sure for the person listening right now that has an IRS issue, and we talked about this before on the show, it goes in waves, right? You'll have people that are like, yeah, I have this, but it's been going on for years, so it's not a big deal. And then right about the time that April rolls around, that stress level starts to rise a little bit more, right? And you see an influx of people coming into your office.
For sure. IRS problems obviously, last 365 days a year and can last for decades, actually. But it is this time of year, tax season, when there's more media talking about it. There's more stress injected, and we do see an influx of people at least deciding to try to solve their problem. January is also a pretty good time of the year because people are making, New Year's resolutions about how they want to change their life and what they want to do to improve their lives. And oftentimes, if you have a 10-year...
That one little nagging thing in the back of your head, you want to get it out of your mind.
Yeah, if you have a 10-year-long IRS problem and it's unresolved, a lot of times, the beginning of the year, January, is a good time to think about it and make a plan and get it done.
So the IRS problem usually follows like the tax return or the unfiled tax return or something along those lines. And so obviously people have a heightened awareness around that because, like you say, the buzz and the news and the media and on radio and everywhere. I mean, you see the line at the post office April 15th, at midnight, people waiting to get their envelope stamped. But is there a certain time of year that the IRS really, because I would imagine at this time of year, they're bottlenecked with doing all the other stuff, and you would think there would be like a different month that they actively pursue IRS debtors. Is that a right word for it, Darrin?
I can't think of a time of the year when they're more active. I can think of some times of the year when they're not. For example, it seems like, no offense to the IRS employees who might be listening, it seems like half of the IRS or most of the IRS takes the second half of December off. And there, for years and years now, there's been an unofficial moratorium on levies and seizures and things around Christmas time because it just seems un-American. It just seems particularly mean even for the IRS.
I would think if you have a tax problem, that might be the ideal time to call them up. Maybe they're in a jolly, happy, good mood.
Years ago when I was a criminal defense attorney, and I haven't done that work in a long, long time, but I used to be in front of a particular judge every day, all day, and so I knew him really well. He's an older gentleman, and Christmas time was the clearance season. So if you were a bad guy, that deserved to go to prison, you're getting probation if I could get the case just pushed off enough to get the plea entered around Christmas time.
Just after Thanksgiving.
Yeah, exactly. Anytime between Thanksgiving and Christmas was a good time. And I think that's one of the things, or one of the attributes of a really good lawyer, a really good advocate, is just predictability. That's what people are really looking for a lot of times. Is I think that clients can accept bad news, when appropriate, but they just want to know, they want the lawyer to kind of look in the crystal ball and try to predict what's going to happen so that they can emotionally, plan for it.
It's like with any business, if you're the expert in that field or in that topic, it's not how much the other person knows. It's that, you know the rules, you know how to play the game, and you play the game to win. And that's what matters.
Yeah, you're trying to get the very best outcome for your client. And that's what's important to remember about when you're trying to deal with an IRS problem on your own and you're dealing with an IRS employee. Who do you think that guy works for? Who do you think he's advocating for? Sometimes it's for himself just because, he doesn't want to do a lot of work. But quite frankly, the IRS has a lot of employees that are looking out for their interests, for the government's interests. And so it just makes sense to me to have somebody on your side that's been through this, more than once.
Yeah. So we talked last week when I had you on my show about one of the common questions you get is, am I going to go to jail for my tax problem? We'll talk about that often on the show. But what about another common one, which is obviously near and dear to my heart, being my business? People ask, am I going to lose my home over these unpaid taxes?
We're based here in Florida, and so Florida has something called it's a really strong homestead exemption law. And what that means, there's actually two definitions. One has to do with the tax break that you get for homesteading your real estate, and that's not really what we're talking about here. What we're talking about is the exemption that Florida residents have on their primary residence, and that's called their homestead, and that's exempt from almost all creditors. And here's what that means in simple terms. That is, if you have a lawsuit, for example, and the other side gets a judgment against the homeowner, they cannot force the homeowner to sell that house to, pay the judgment off. That's why O.J. Simpson, frankly, moved to Florida from California, because
the property rights are very protective in the state of Florida.
Absolutely. And it's unlimited. So there's a couple other examples. There was a gentleman that I used to know that lived in Avila, a very high-end community in Tampa. And he lived in a mansion that was over 36,000 square feet. And one of the reasons why he lived there and had this such this valuable, ostentatious sort of property was it made it hard for creditors to get at that. Now that I've explained that, the IRS is not subject to the Florida exemption statute because of what's called the supremacy clause in the Constitution.
I was going to say because they're exempt from all the rules, but maybe not.
Well, sometimes they act like they're exempt from all the rules, but they're not exempt from the federal laws, but they are exempt from state laws because of the supremacy clause of the Constitution, which basically stands for the proposition when there's a conflict between state law and federal law, then federal law is going to reign supreme. So technically, the answer is kind of a long-winded answer, right?
But it's not really a cut and dry question.
Yeah. So technically, the answer is, yeah, you can lose your house to the IRS over tax debt. Now, the good news is it's really pretty rare.
Likelihood is slim.
Yeah. Knock on wood. I don't know if there's any wood here in the studio or not.
I don't think so. I think it's all for Micah and
just knock on my head here.
Yeah.
I've not had a client actually even be faced really with the proposition of losing their house. And I've represented thousands of people over the last couple of decades. But I have seen that happen, and it primarily seems to occur with the folks that we call tax protesters. And I say that, and it's not a pejorative term in my mind. They take it that way. Tax protesters are just folks who don't believe that the income tax is constitutional. Maybe it wasn't ratified correctly, or that sometimes some of the arguments are really crazy. They're like, the U.S. government's really a foreign corporation, and or the IRS is a foreign corporation. I can't keep track of all the arguments. And I'm not even running down the arguments here. I'm just saying I don't subscribe to them. I don't believe those are correct. And so when those folks file, 500 pages or 1,000 pages of documents with the IRS over, 5 or 10 years, eventually what happens is somebody at the IRS finally says, all right, you forced me to do this. I'm going to do the extra work, and I'm going to make your life living hell. And those are the folks that I've seen, in my experience, are usually faced with the prospect of losing, their home. Otherwise, it's very seldom.
Now, it's probably more likely that they would actually lien the home, and that's completely different than forcing a sale.
Well, that's a great point. And the other thing is the public doesn't really understand the difference between the terms lien and levy. Right? I mean, people use those interchangeably all the time, and they really mean different things. Levy is the really bad one. Okay, levy means seizure, and seizure I can't think of a good use of the term seizure, either epileptic seizure or taking my stuff. Seizure sounds really bad to me. A lien is actually, in this context, a federal tax lien is when the IRS files a piece of paper at the clerk's office and gives the world formal notice that you owe the debt to the IRS. It shows up on your credit report, so it dings your credit by usually about 50 points. And it also attaches to all of your property, real or personal, wherever that may be. What that means is, technically, the lien attaches to the socks in the underwear drawer.
Anything you're selling on Craigslist.
Anything you got, including your house.
Normally, people are not going to see any type of movement or change, at least in our experience, unless they try to refinance, sell the house, do some type of cash out, do anything with the home other than pay it off. And Florida has a lien line. We've talked about that before. And IRS tax liens fall pretty heavy on the lien line.
Yeah, they're pretty high priority.
Yep. Oh, gosh, that music was a little loud coming in there, Pat. This is Katrina Madewell. I'm your co-host, and you are listening to the IRS Solution Attorney Show with your host, Darrin T. Mish. We have enjoyed having you this morning. We have to take our real quick first break, but we are around. We are live in the studio, so if you want to call in and ask Mr. Darrin Mish a question, 888-404-1010. I'm sure you have that saved in your phone by now, but it's 888-404-1010. Darrin will be happy to answer your questions this morning. Back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back. You're listening to the IRS Solution Attorney Show, and I am your co-host here with Mr. Darrin T. Mish.
That'd be me.
So we have some calls that came in over the break. Thanks for sticking around through the commercial. Let's go ahead and grab the first one. We have Brandon.
Hi.
Welcome to the show.
Hi. Me and my wife filed our taxes online with the TurboTax, and we had forgotten that last year we cashed out her 401k when we had our first child, so she wasn't going to go back to work.
Oops.
And received the 1099 afterwards.
Okay.
So I've been looking into it. It says something about filing
amended
what they
return.
called it now, but
Yeah.
yeah.
Thanks for calling in, Brandon. I
wondering.
appreciate it. Yeah, I can answer that pretty easily. That's pretty common, is that, you might get a 1099, or you might remember something that, after you filed the return, because a lot of people get kind of in a rush to file their returns to get the refund that they're anticipating, that they're thinking about. And in your case, it was like, oops, forgot about that one. You just have to file an amended return. That's a 1040X. And get that thing sent in. So you have up to 3 years. But what'll happen is, if you don't file that amended return here, pretty quickly, reasonably quickly, then what'll happen is you'll get a letter from the IRS called a CP2000, and they will, quote, correct that error for you. The problem with waiting for the CP2000 is there's going to be a 25% accuracy penalty on there. So you really don't want to do that. You want to go ahead and get the amended return in as fast as you can.
Okay, now is there a specific place I can find the form for that?
Great question. The best way to get that form would just to go on the IRS website. That's irs.gov. And there's a link on there called Forms and Publications, and they go way back, 10, 15 years. So definitely that form will be there on the website.
Okay, thank you.
You're welcome. My
Have a good
pleasure.
day, Brandon.
Looks like we have one other caller. George, are you there?
Yes.
Hey, George.
Hi. I don't have a computer to order tax forms online, and I spend hours and hours and hours on hold trying to get them by mail. Is there another source that you can get 1040 forms?
George, back in the day, we used to be able to go to the post office and the library and the IRS and all these different places, but now we're a super computer-centric society. So that's a really good question. Where do you live, George?
Ruskin.
Can you still purchase those at like Office Depot and Staples? Because I knew they had that available forever. Did they finally get rid of those?
I don't think so. I'll tell you what. I would go down to the public library and use their computer and print it out. And if that doesn't work for you, you can always come by my office. I'll print them out for you. But my office is not close to Ruskin. In full disclosure, I'm actually in the North Tampa sort of Lutz area, so that's not going to be real convenient. But I know that the Tampa Hillsborough County Library System has, internet access, and that's probably going to be the best way to go. I was just in the IRS office in Tampa not too long ago, and as I recall, that there are no forms there. anymore.
Really? Not even in the main lobby of the IRS, no forms?
In the interest of providing better customer service, the IRS decided to cut back on customer service. So I think the library is probably going to be the best way to go. And there's probably a librarian there that can help you if you don't understand or not, if you're not super computer savvy and don't know how to do it. There's someone there that'll do it for you or help you.
No, I don't even know how to turn one on.
Well, God bless you. That's probably a good thing.
In this day and age, it can be. We're all super connected.
Okay, so there's no alternative. So
I don't think so. Oh, okay. There is one alternative. I just thought of one. You can call 1-800-829-1040. That's 1-800-829-1040. And tell the IRS person who answers the phone what forms you need, and they'll mail them to you.
I think he said he was on hold for a long time. Didn't you say that, George?
Yes, but I'm not sure that that's the number that I called. It may have been.
Okay, great.
I'll tell you a little secret. I'm going to tell the whole world a little secret now. Call them right at 8 a.m. Don't wait till 10. Don't wait till 9. Call them right at 800, and you'll get through right away.
Well, bless your heart. Okay. 1-800-829-1040.
Yes, sir.
Thank you. Very nice.
It's my pleasure. Take care.
Bye.
Thanks for the call, George. Have a good day.
So, going back to, are you going to lose your home, over unpaid taxes? There was something called the Taxpayer Bill of Rights, and it essentially discourages the IRS from seizing primary residences. So in those instances where the IRS is going to seize a primary residence because, you've just pushed them too far, or you just really owe them a lot of money and and they've decided to do that, they cannot just unilaterally do it. They actually have to file a lawsuit, and they have to have a district court, sign off on it. And there's a whole process and procedure, and it's pretty rare, and it's not real fast either.
And that homestead exemption, by the way, just to chime in on the real estate side of it, Darrin, that $50,000 exemption does a lot more than just give you a $50,000 exemption. Not only does it cap your taxes, but it proves it was actually your primary residence, which is a good point, right? Because we talked about them actually seizing other homes, like vacation homes or investment properties, a lot more likely than a primary residence.
I'm pretty sure that homestead stuff was on the bar exam, but I think I took the bar exam in 1993. So, forgive me if I didn't remember that. But yeah, that's absolutely true. They can and do seize other, rental properties, vacation homes, and that kind of thing. There's just a really strong bias against throwing people out of their primary residence. And that's one government policy that I really strongly believe in. I think that's a good idea, because there's lots of reasons why we shouldn't throw people out of their homes. Now, if they're older and they die for some reason, and there's a tax lien filed there, then potentially the IRS can get involved in that estate, probate proceeding. They can get paid that way.
If they got that lien, I'm pretty sure they're getting the money.
Probably.
That's usually how that works.
Well, it depends. If it's
do you settle those ever for less than the amount? Because don't they accrue interest and stuff?
You mean for people
they file an
deceased?
IRS lien on the house?
Mm-hmm.
And let's say it's there, they want to sell it, refinance it, somebody dies, it's in probate, whatever the situation is. Don't those usually accrue penalties and interest once they file the lien? And do you settle those for less?
Sure. I've never done a probate case where the lien survived, the death of the person, the taxpayer, and that the house didn't go to the spouse. That's what normally happens here, right?
Depends on how they're entitled now.
Right. Most married people, I think, title their properties tenancy by the entireties, which means
husband and wife,
and then one predeceases, the other one gets the house, and there's no probate or tax implications. That's a lot more common. I've not been asked by, that would probably be an estates and trusts sort of lawyer, probate lawyer, who would ask me to do that, and it hasn't come up.
Because one lawyer doesn't know all the law questions. So
oh, that's for sure.
You're really good at the IRS stuff.
That's for sure.
So if you do have questions, we'll continue to take calls throughout the show, 888-404-1010, 888-404-1010. So what is the Taxpayer Advocate Service, Darrin? What is that? Like, you hear that, but what does that mean?
The Taxpayer Advocate Service is an independent branch of the IRS whose job is essentially to help unravel bureaucratic snarls, snafus. Just when nothing's getting done, you're just like locked up in a mess. And what I use the IRS, the Taxpayer Advocate Service for, is instances where I know that I can solve the problem, or the IRS has done something, inappropriate, illegal, that kind of thing, but I just can't make the bureaucracy do what I want it to do. And then I'll use the Taxpayer Advocate Service to help. And you can file. But
those people are still government employees, right? Like, how far? I guess my real question is, how far do you really get with the Taxpayer Advocate Service? Like, is that a joke?
It's a really good question, and it's analogous to back when I was a public defender. right? So I was a public defender and I got a paycheck from the state or the county.
Yes.
And
Very
so-
similar question.
And so every morning, a whole bunch of guys in shackles would get brought into the courtroom. And a lot of those guys would say things to me like, I don't want you, Mr. Public Defender, because you get paid by the government and you're not interested in helping me and that kind of thing. And it's very similar with a taxpayer advocate. Yes, they get a check from the Treasury, but they're really there to help taxpayers. So when they go, they actually can and do act as the advocate for the taxpayer, hence the name.
Probably more of a liaison, would you say?
Yeah, I think liaison is a much better word, and that's how I
think
use
of
it.
advocate. I think of somebody like you that's actually truly looking out for someone else's interest that's not paid by the government. To me, in my mind, that's an advocate.
Yeah, and then there's a national taxpayer advocate, and that's a person appointed by Congress. And right now her name is Nina Olson. She's been in office for a long time. And she does something that's really interesting and valuable every year. She puts out an annual report to Congress where she outlines all of the problems that she sees dealing with the Internal Revenue Service and what her proposed solutions are. So those of us who are in this business where we help solve IRS problems on a daily basis, when that thing comes out, we read it because we typically agree with her and we want to help move the needle towards, fixing those problems. There's some systemic problems that occur at the IRS where it's the same problem over and over. I'll give you an example. We do a lot of offers and compromise, and an offer and compromise is where you make a deal to settle for less. And one of the prerequisites for an offer and compromise is you have to have all of your tax returns that you haven't filed. They have to be filed with the IRS. So we'll get back to that on the other side of the break.
Yeah. Hold that thought. You can call us 888-404-1010, or you can reach Darrin on Twitter at Darrin_Mish. We'll be back in just a minute. Welcome back. You are listening to the IRS Solution Attorney Show. Thanks so much for listening to us this morning on your drive to wherever you're going. By the way, Brandon and George, you are going to be entered to register to win 2 tickets. They do a drawing at the end of the month for Financial Peace University Scholarship. So thanks so much for calling in with your questions, both of you. Even you, George. Thanks for calling. So where we left off, we were talking about an offer and compromise. You were just getting ready to explain that.
Yeah, so I got to get used to the new breaks and whatnot. And I also have to learn what the music means. But anyway, I'm not a professional radio guy here. I'm just the IRS solution attorney.
His real job is IRS problems, which that's a good thing.
I'll get better. So I was talking about the offer and compromise, but really I was talking about systemic problems. Systemic problems are things that continue to happen to lots of taxpayers across the country within the IRS. So an example of a systemic problem would be when you file an offer and compromise, you're supposed to have all of your unfiled tax returns, filed and prepared. And a lot of times what we'll do is we'll file, for example, if we were going to file one right now, we would prepare and file 2015, even though it's early in the filing season, and we'd send it in with the offer. And what happens is the IRS won't include it in the offer. So they're supposed to stop all collection action while the offer's pending. That's going to take 6 months or a year. So you want everything to just stop, kind of like a bankruptcy almost, where, all the creditor stuff has to stop.
So you could have not
bankruptcy.
filed for 10 or 30 years and you just have to file 1 year and send that in with your offer? Is that what you're saying?
No, that's a really good question. You have to file all of your missing tax returns, but if you're a chronic non-filer, for example, you haven't filed for the last 10 years or so, then you're only going to have to file the last 6. But in my example,
that's like, I'm listening to that, Darrin, imagining someone that has not filed returns in 10, 20, 30 years. And that's like overload. Like, how the heck do if they're a W-2 employee, probably pretty simple, but I would imagine a lot of the people that have not filed are self-employed. So they're thinking expenses, mileage, income. I got to gather all that stuff. They're probably not very good bookkeepers. And then they're like,
that's what happens. And I'm sorry, I just blew right past like how somebody could end up not filing returns for 10 years. My favorite story is the gentleman that hadn't filed for more years than I've been alive on the planet, and we got him worked out. So that wasn't the end of the world. But yeah, what happens to these self-employed folks, the people that get 1099s typically, is they're good at what they do. So they're good at cutting lawns, or they're good at plumbing, or they're good at, they're a good lawyer, or they're a good doctor, and they're getting a 1099.
Or real estate agent. You like to throw them under the bus. Don't leave them out.
Forgot about
They're
you
your
guys.
favorite clients.
You guys are like chronic with the problems with the IRS. But so that's what happens is you're busy trying to put food on the table and send your kids to school and stuff, and all this bookkeeping stuff just gets overwhelming. And what happens is after the first year comes and goes and you didn't file and nothing really tragic or urgent happens, then it kind of just
must be okay.
Kind of just lulls you into, this
I'll
quiet
get to it later.
slumber. Yeah, where you're going to deal with it later. And I do believe that, 99.9% of my clients do and did intend to get around to filing their tax returns.
Well, when you look at, just thinking about the whole bookkeeping mess, like in the DISC personality profiles, the C's, your bookkeepers, your accountants, your analyticals, your engineers, that's less than 20% of the population. So that is not likely the person listening.
And believe it or not, that's not me either. The people,
or I.
People think, tax attorney, they think, oh, numbers guy. No, my background was as a criminal defense attorney. So what I did when I became a tax attorney was I read the rules, and then I learned how to apply the rules to my client's specific, circumstances. And I know the rules better than the IRS employees that I typically work with now. So we just make sure that those rules get applied to the client's circumstances.
And if you're in that position, Darrin can take your call this morning. You're not the only one that hasn't filed for 20 years. 888-404-1010. Again, 888-404-1010. So we did have a question from another listener, and people can hit Darrin up on Twitter at Darrin_Mish. You're on Facebook and across the web.
Right.
And so we get questions a lot of times like that we'll bring into the show. And one of the ones you had was a contractor failed to send me a 1099 for work I performed for him in 2004. He just now mailed it to me a year late, right? 'Tis the season. Everybody's mailing these suckers out. The income went unreported on my taxes last year. So should I just add them to this year's tax?
It's kind of a variation on the first caller that we had today, right? That was Brandon, I think. It's very similar. This always kind of makes me laugh. When it's a $2,000 1099 and you're earning, the revenue is $200,000, then okay, I get it. I can see how you forgot. But when it's, your primary income source and you forgot to put it on your 1040, that's probably not a good thing. So the answer is not to put the income on this year for sure, because what's going to happen is when the IRS gets that 1099, we have to presume that the sender of the 1099 sent it not only to you, but sent it to the IRS too. So when the IRS gets that 1099, they're going to attempt to match that income up on your Form 1040, right? If there's not a match, then you're going to get one of those letters that I was talking about earlier. It's a CP 2000, and they're going to fix that mistake for you. And then they're going to add an accuracy penalty of 25% typically. And then there's going to be, interest and penalties on that. So if this happens to you, do not wait. You want to file an amended return as immediately as you possibly can and just get that in there so that you don't get whacked with that penalty for sure.
So the IRS changed something this year where you could start filing early, didn't they? Can you start? It was as of January 19th you could file?
Yeah, they turned on e-service or e-filing on January 19th this year. It was a little bit later than normal. But interesting, just yesterday, there was a giant snafu. Some computer hardware at the IRS failed yesterday. And so all the e-filing for the whole country went down, including e-services, which is one of the ways that we obtain records for our clients. So I'm glad it wasn't just me, because yesterday, literally, I was banging my head against the wall why I couldn't get this information I wanted on 2 or 3 clients. And I was blaming our internet in the office, our vendor, everything.
So what happens? It just freezes, or the page doesn't load, or you get a 404 error, or what?
You just get nothing. It just doesn't work. You can see it trying to log on, and then you just get these weird, computer looking error messages that I couldn't interpret. I didn't know what that meant, but I saw on the news today.
Aw, snap.
Yeah. And sometimes
I forget which browser does that. I think it's Chrome. One of them says, "Oh, snap."
I think it is Chrome. That sounds like Google, but
little fun quirkiness.
But apparently, it was literally one piece of hardware, and the IRS is like, "We don't know when it'll be fixed. We're going to try and get it soon." So there's a lot of people out there depending on their refunds, and they want them fast.
Yeah. Yeah, that's usually going to be your first filers, the ones that are getting a refund.
For sure. It's not my clients.
By the way, you're giving the IRS a, interest-free loan. Not a good recommendation. Probably should change your withholdings, but, you can ask your CPA about that. What about the Obamacare stuff, right? Because I forget when open enrollment is scheduled to close, but I think it's close. Have you seen a lot of people actually getting these? And you'll have to forgive me because I don't remember the exact word, but the penalty if you don't have insurance or get Obamacare or whatever related to that whole insurance world now.
I love this. It's just like the book by George Orwell, 1984. We can't just call it the Obamacare penalty because that would have his name on it.
But everybody relates it to that. You know what I mean? What's the real name of it?
The real name is, it's a shared responsibility
payment. There you go.
Payment.
See, shared responsibility payment. Like I'm supposed to remember that.
Well, the first thing, it was funny. I mean, I'm in this business. I look at IRS notices literally every single day. The very first one I saw, it said, you have a fine of whatever, a few $100 for the shared responsibility payment. I was scratching my head.
How much was that fine?
It was a few $100s in this case,
Okay.
but it can range from, $50 to $5,000. I forget exactly what the ratio or what the formula is, but there's a formula for,
So it's not a percentage of income. It's a crazy formula.
It has to do with your ability to pay and how much of a discount you got on your policy and things like that. I think there's better alternatives, frankly, to health insurance for most people. The people that don't have the pre-existing condition stuff. For most people, there's going to be better options than Obamacare.
Well, the problem is there were certain people that were looking forward to that because healthcare would be available to everyone. But what they didn't realize was that the cost of the healthcare went up and many people lost their doctors and, some of the stuff they weren't quite expecting. So when would you typically see these start rolling around again, Darrin? Like because it's just a notice they send, right? Like you owe tax notice?
I would say 30 to 60 days after filing of the return.
So whenever they file, whether that's early or late.
Right. I have a tax preparer at the office who does taxes, tax returns all day, every day of the year, because we're so busy and we have so many old returns that we do. And he went to a refresher seminar this year for, the current tax year changes and all that stuff. And he said they spent an entire 8-hour day on just Obamacare and what it has to do with the 1040 stuff. And since it hasn't risen to the level of a real problem yet, I'm not as up to date on it as I probably should be. There's an interesting thing about the shared responsibility payment, though, and that is that it's actually not leviable. So what's that mean?
Yeah, what does that mean? You got to break that down.
It's kind of like a quasi penalty. It's a real penalty, but they can only, if you're not going to just pay it, then they can only offset it with future refunds. So it's like that's bizarre too.
That is weird.
It's like, okay, so it's a penalty.
We're going to take
it
from what you get in the future.
And I think the reason Congress did that is they did that so that, the IRS.
It's a laxy-daisy penalty.
If somebody owed, $1,200 or something over a couple of years, the IRS didn't rush in and lien them and start, hassling them and over these relatively small penalties.
How do they know to assess that? Did they change something on the tax line or whatever that shows if you have insurance or you don't have? What changed?
Yeah, you have to, basically you're proving that you had appropriate health care that covers certain things. And most of the policies, I think, when the law changed, most of the policies, I know mine did, it changed to include and cover certain things like pregnancy for men and,
what?
Things like that.
Pregnancy for men? Oh, do explain. This is getting great. So you're listening to much more than the IRS Solution Attorney Show. We have a lot of fun here.
Yeah, in the law, it's mandated that pregnancy for males has to be covered, and it's a way to make men pay more to spread the risk out for obviously only women can become pregnant, at least at this point that I'm aware of, and it's a way to spread out that risk and get more, the whole pie to pay for,
surrogate or something like that.
Yeah, and it's not really that. It's
what is it exactly?
It's more just to spread the risk out and make everybody pay more to cover the people that need that coverage.
Gotcha. Pregnancy for men. Gotta love it. You're listening to the IRS Solution Attorney Show. I'm your co-host, Katrina Madewell, and Darrin T. Mish is your host with the most for the IRS Solution Attorney Show. We will take your calls live. We got a couple more minutes to do that. 888-404-1010. 888-404-1010. If you do call in, Pat George back there will take your name and number and enter you to win 2 tickets for an FPU scholarship at the end of the month. Coming up, don't miss our train wreck of the week. We'll be back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show. I'm your co-host, Katrina Madewell, with Mr.
And I am Darrin T. Mish, your IRS Solution Attorney.
So we did get some questions also during the break, and we'll read those off to you. You can call Darrin's office number at 888-GET-MISH.
That's 888-438-6474.
888-GET-MISH, M-I-S-H, like dish, but Mish. And
I prefer fish, but
fish,
but
yes, Mish. Of course. So we were talking. So one of the questions, and I could probably chime on the first part of this, Darrin, and then obviously you're way better suited for the last part. But one of the questions we got from Angela in Tampa says, "I'm currently renting a home and I'm looking to buy. Problem is, I owe the IRS over $65,000 in back taxes from 2011. Am I allowed to buy a home when I owe the IRS money, or will it just get seized? So, if you will, I'll chime in on the earlier part of that, since we see this stuff kind of regularly too. The problem is, Florida, again, follows a lien line, and the lien line is basically the priority of the lien. So mortgage liens, that's why first, second, sometimes second mortgages carry a higher interest rate. They fall subsequent or behind a first mortgage lien. So what that means is IRS liens are pretty high up the lien line. And since technically they could garnish or levy or swoop money, which could potentially basically and hinder your way to make your mortgage payments, what you will find is if you have an IRS issue, and really a lot of stuff for that matter, like open collections have to be settled now and just crazy stuff. But I can tell you, Angela, if you owe $65,000 to the IRS, you definitely are going to want to connect with Darrin first, because most lenders are not going to give you a loan. And we work with private money individuals as well, like people that have 40, 50% to put down, and they will lend in almost any circumstance. But in that case, even they are a bit afraid of that. So I guess if you could get a loan, which is possible, right, to get some money, do you think they'd just swoop in and seize it?
We've been doing this show so long together that I think you actually just nailed that. Honestly, there's no real prohibition legally to obtaining the property, but as somebody who's recently gone through the mortgage underwriting process myself, took about 6 months, you're not probably going to get a mortgage. But,
I mean, you'd be better off trying to put it in a trust or like an LLC.
It's not a great idea. I think that's probably the better answer. It's not a great idea to owe the IRS significant money and then try to buy a house. Even if you were able to do it, it's just going to make things unnecessarily complicated. I see it a lot where people owe money to the IRS and then they ultimately get a mortgage. And then when we're trying to do an offer and compromise, and we haven't talked about that much today, but that's where you make a deal to settle for less. Part of the equation is how much equity do you have in assets? Well, and sometimes when you buy a house, if you buy it right, you have built-in equity, right?
Right.
So now what you've done is you've turned cash into, or actually you've created equity, and you're going to make it harder to settle with the IRS. Do I think they're going to seize your primary residence? Probably not.
Yeah.
Probably not. It's very unlikely, but you have probably significantly complicated the resolution, part of the tax.
If it were me, Angela, I would call Darrin, get that back tax issue resolved so that you can move forward and buy a home. And in the meantime, if you've come across a deal that's just too good to pass up, perhaps you could purchase it in someone else's name until they could, transfer it to you or put it in an LLC or a trust, something like that.
Or if your spouse doesn't have a tax problem, I mean, you do, then maybe you want to go ahead and, title it just in your spouse's name.
So how does that work when it's a spouse? Does it carry from one to the other?
No, it doesn't. Actually, if they did not file married filing joint tax returns, then the obligations are not joint. So what happens a lot is you'll have two single people, right? There'll be one of them, usually the guy. He'll have a tax problem. And
geez, at least the realtor's not being thrown under the bus this time.
And they'll get married, and that doesn't suck the wife back into his tax problem vortex. But if they were to file joint returns going forward, it could, kind of, in a way, because let's say going forward they have refunds coming, it's going to automatically recover apply those refunds to his old liability. But there's a way to fix that too, and that's called an injured spouse.
What about if it's a business, like carrying over, and the other spouse doesn't have an interest in that business? Does that change the dynamics any?
Basically, the only way for a spouse to be liable for another spouse's tax obligations are if they file a filing jointly return.
So that would be an instance where someone would file separately.
Yeah, and we look at that a lot, and most tax preparers just look at, saving the people tax money, and so they're going to always have a preponderance or a propensity to file joint returns for clients, and we will often want them to file separate returns. It's about that time.
New station?
It's time. New station.
Train wreck.
New train wreck audio. Really long audio here.
Yes.
That's a long
We're going to have
wreck.
to find that other train crash music.
Yeah, so this is the part of the show where I basically talk about someone who came into the office and they were absolutely an IRS problem, train wreck, and through the use of our services, we resolved their problem. So I only have a couple minutes here. Basically, I had a gentleman come in and he owed $20,000 to the IRS. There's a statute of limitations for the collection of tax. It's 10 years from the date the tax was assessed. In this particular case, the gentleman only had 14 months left on the statute of limitations. So what that means is the IRS only had 14 months to get the money from this guy. What we were able to do was we got him into an installment agreement of $500 a month, and it ended after 14 months. So that meant that he only had to pay $7,000 of the $20,000 debt. And he knew with certainty exactly when it was going to be over.
So 20 grand, only had 14 months left, and the IRS said, all right, you have the ability to pay 500. Mm-hmm. We'll take what we can get until that statute's up. Does that apply if you've already entered into an agreement with them?
Absolutely. The statute of limitations begins to run when the tax is assessed, and there's only certain things that can stop it from running. The fancy term we use as lawyers is toll the statute. That means stop it. So the filing of an offer in compromise tolls the statute. The filing of a bankruptcy tolls the statute. Certain appeals toll the statute. But in this case, he'd done none of these things. He'd basically been, your typical IRS problem client, just stuck his head in the sand and did nothing.
Please go away.
But eventually a revenue officer was assigned to the case, and that revenue officer came a calling personally and wanted to know how my client, was prepared to take care of his obligations. So he got me involved. We were able to demonstrate to the IRS that he could only pay $500 a month, and we knew that there was only 14 months left on the statute. That's called a partial pay installment agreement.
So I imagine the IRS has people a lot like collection agencies that know, look, your pennies on the dollar, time is running out kind of thing. People that just chase just those taxpayers and tax bills do.
Yeah, for sure. I mean, those are the revenue officers are the people whose job it is to go out there and get the money. So most taxpayers who owe tax to the IRS deal with what is called ACS. They deal with like a computer basically in the toll-free numbers.
Gotcha.
If you have a revenue officer assigned, you have a special kind of trouble coming.
You better call Darrin. Darrin's number is 888-GET-MISH. 888-GET-MISH, like the fish, but with an M, like Mary.
Yeah, that's 888-438-6474. It's been a great show today. Really enjoyed being here.
Thanks for joining us this morning. We will be back same time, same place next week. So tune us into the dial 1010. And also, if you have an HD radio 99.5 FM too, we'll be back next week. And I will be here tomorrow at 9. Thanks so much for joining us for this week. We're out.